Welcome back. This is the seventh video of the series of accounting course. In today's lecture, we are going to analyze the financial transactions So let's start today's video. Analysis of financial transactions part 3. Today is the third and last part on the analysis of the financial transactions. We have already discussed 17 transactions. Now I am going to start with the transaction number 18. Okay, transaction number 18 is cash withdrawn by the owner is 30,000 and goods worth rupees 10,000 for personal use. There are three changes in this business transaction. Number one is number one is decrease of cash. Number two is decrease in goods. And number three is increase in drawings. Or decrease in owner's capital. These are the three effects of this transaction. Now let's discuss the next transaction, which is cash given away as charity is 5,000 and goods as charity rupees 1,000. Now this transaction also has three effects. Number one is decrease of cash, as the cash is given as a charity. Number two is decrease in goods, and number three is increase in charity expense. Please remember that charity is an expense item. Okay. The next transaction is transaction number 20, which says goods distributed as free samples for advertising of rupees 20,000. There are two effects in this transaction. Number one is decrease of goods, and number two is increase of advertisement expense. Please remember that the advertisement is an expense item. Okay. The next transaction is transaction number 21, goods lost by theft of rupees 15,000. This transaction also has two effects. Number one is very obvious, decrease of goods, and number two is increase of loss by theft. So this is also an expense item. Loss by theft is also an expense item. The next transaction is transaction number 22, which is stationery consumed during the month of rupees 4,000. This transaction also has two effects. Number one is decrease in stationery asset, and number two is increase in stationery consumption, which is an expense item. Okay, so on the one hand an asset is decreasing, and on the other hand an expense is increasing. The next transaction is transaction number 23, salaries paid for the month of rupees 50,000. Okay, this transaction also has two effects. Number one is decrease of cash, and cash is an asset, and the second fact is increase in salary expense. So remember that salary is an expense item. Okay, I think there is also a transaction number 24, which says that Rent of the building paid is 30,000. This transaction also has two effects. Number one is decrease of cash, and number two is increase of rent expense. So remember that rent of the building is an expense item. The next transaction is number 25, which says electricity bill of the factory paid rupees 45,000. Okay, this transaction also has two effects. Number one is decrease of cash. Number two is increase of electricity expense. Are electricity charges. So electricity charges or electricity expense is an expense item. Okay. So in all the above discussed transactions, it may be observed that in every business transaction there are at least two changes, and in some cases there are more than two changes. All these changes are recorded in the books of accounts of the business in separate accounts. Every change is supposed to be recorded in a separate account. You should note that a discussion about accounts or ledgers and how a change is recorded in an account is made later in this course. So stay tuned for the further learning in this course. Now let me briefly introduce you to a hardcore topic of the financial accounting, which is double entry system. Which we will be learning in the coming videos. So stay tuned for further learning in this course of financial accounting. That's it for today's video, and the analysis of financial transaction series is closed now, and we will be discussing now onwards a very important topic, which is double entry system. We have already seen in this series of videos that every business transaction causes at least two changes in the financial position of a business entity. At the same time, hence both the changes must be recorded in the books of account. Otherwise, the books of account will remain incomplete and the result certain, therefore will be inaccurate. So it's very important to learn double entry counting system, which we will start in our next video from tomorrow. So stay tuned and keep watching and keep learning the accounting with me. Until then, take care and good